Imagine that in distant Latin America, ordinary people often have to wait in long queues for 1 or 2 hours just to perform the most basic service of opening a bank account. A rebellious company traditional banks resent but can't stop has ended the financial marathon. Customers open accounts on smartphones in 3 minutes with no management fees. Tencent disrupts banks, investing $180 million in Buffett and betting $500 million. Is it charity? Or is he setting up a big picture that we don't understand? Is his stock a trap or a treasure? Today, let's deeply analyze this rising fintech stock. The story began in 2013 when a Colombian banker named David Velez had a crazy dream. He wanted to create a bank without any physical branches. He aimed to eliminate traditional banks earning $40 billion annually yet offering terrible services. 9 years later proved right. This bank now has 123 million customers, and its stock price has nearly sextupled since the IPO. He is today's main star, Nubank. With the stock code NU1. Hello everyone, I'm Kay, a US stock investor with 18 years of experience. If you're new, please subscribe and enable the notification bell. Subscribe to receive my fresh new content instantly, where I'll share investment opportunities. Let's end blind trading and enjoy the booming profits together. Let's get to main topic. Its business model in Latin America disrupted the traditional banks, who were once enjoying the easy days of making money. They are being thrown into chaos by a digital rebel called Nubank. Brazilians used to open bank accounts at traditional banks with expressions like going to the dentist, gritting their teeth. They first need to prepare a bunch of documents, wait in line for several hours, and finally have to pay high annual account management fees. This awful experience wasn't interrupted until 2013, when a Colombian named David Velez was in a small office in São Paulo. He founded Nubank after working at Red Mountain Capital and witnessing Brazil's 5 major Latin American banks firsthand. Charged customers up to $40 billion annually, while the service quality was subpar. So, this maverick in the banking industry decided to create a fully digital bank that doesn't require physical branches, only a mobile phone. He named the new bank Nubank, where new in Portuguese means spiral, symbolizing transparency and simplicity in the banking industry. Today, Nu Holdings became Latin America's largest digital bank in 2024, with 123 million customers and a 4% stock price rise. Like Ultraman in banking, this company specifically aims to save Latin Americans who have long been mistreated by traditional banks. Nubank's business model is quite simple. Unlike traditional banks, Nubank has no physical branches. Customers can open accounts or apply for credit within minutes through a mobile app. It's like Uber for banking, completely bypassing the high costs of traditional physical branches. Its services start with free purple credit cards and digital accounts, gradually expanding to loans, savings, investments, and insurance products. This model is similar to Amazon's flywheel effect, first attracting customers at a very low cost, less than $5 per customer, and then through cross-selling more products to increase the per customer. A long-time customer who has been using Nubank for over 5 years joked, "I haven't bought anything on installment from Nubank except a coffin. All other financial services are handled there." How does Nubank generate profit? Its model magically converts zero into gains, deriving income mainly from 3 parts. Loan interest accounts for 43% of gross profit and is the main component, followed by merchant fees from card purchases and financial product commissions. Commissions from products like wealth management and insurance thrive, enabling profitability even with free accounts. Traditional banks, burdened by high operating costs, charge various fees, like a handsome rich guy delivering takeout in a Porsche 911 Turbo. One delivery guy uses an electric bike. Their cost structures significantly differ despite both delivering food. Success results from a perfect storm in Latin American banking: inadequate services, high fees, rapid digitalization. Colombia's traditional banks maintain high profit margins, while millions lack accounts. Nubank seized this. Offering free accounts, transparent pricing, and a mobile-first experience, Nubank is more than a bank. With their initial bank account, they are not only capturing market share but also expanding the entire market. As a market analyst said, Nubank, instead of fishing, They raise fish by first growing the pond, then naturally capturing more. Ubank's growth is astonishing. From 6 million in 2018 to 123 million by 2024, its key is ultra-low customer acquisition costs. Annually, 80 to 90% of users arrive through word of mouth, with customers both using and eagerly recommending the service. Such situations are rare in Latin American banking. Once customers join, they remain loyal with a 0.1% monthly churn rate in early 2021. As customers use more products, their value increases. Mature segments generate $27 per month versus average $12.20. A Brazilian university student said, "I use Nubank myself and brought in my great-grandmother, she's addicted." Using the Purple credit card to shop daily. Nubank's ambition extends beyond Latin America, with CEO David Willis planning to relocate the company's legal base to the UK. He plans to enter the US market with a threefold vision to lead Latin America's retail financial services. Willis aims to transcend the financial sector and establish AI private banking, including an envisioned AI private banker, enabling the financial services enjoyed by the richest 1% to gather the poorest 50% is like the banking industries. Robinhood aids the poor by using technology to cut service costs, while Nubank offers a luxurious investment lineup. Red Mountain Capital, Tencent, and Buffett placed their bets. In 2018, Tencent invested $180 million in Nubank. Buffett's Berkshire Hathaway invested $500 million in 2021. Holdings now exceed $1.4 billion without selling. Major players are attracted by Nubank's huge potential in Latin America, despite it being the largest digital bank. According to Nubank, it only accounts for about 3% of the market share in Latin America's financial services revenue, indicating growth potential. Just as Buffett said, "When the tide goes out, you can see." The problem is Nubank's rising tide, not those swimming naked. Nubank has expanded from Brazil to Mexico and Colombia. Moreover, its business is thriving locally and plans to expand globally. CEO David Willis's vision is to make Nubank the Alipay of the banking industry. Using financial products as a springboard, its greater impact is to become a super platform that covers all aspects of people's daily lives. Next, let's study NU's financial report. Nu Holdings is the leader in Latin America's digital finance. From 2023 to 2025, achieving a transformation from scale expansion to high-quality growth. Financially, 2023 can be considered a key turning year. Total revenue reached $8.029 billion. Net profit was $1.031 billion, reversing a $365 million loss in 2022. In 2024, revenue is $8.27 billion, up 43.6%. Net profit stood at $1.972 billion, up 91.3% year-over-year, nearly doubled, and the second quarter of 2025, revenue growth rate gradually slowed. Quality improvements yielded revenue of $2.51 billion, plus 28.8%, a net profit of $637 million, plus 30.7%. Profitability indicators are continuously improving, with gross margin rising from 34.9% in 2023 to 42.2% in Q2 2025. Buffett's preferred metric has stayed consistently high at 28% for years. Operating cash flow continues to surge as usual. Operating cash flow rose 89.5% year-over-year, from $1.266 billion to $2.399 billion. Almost doubled, reached $3.64 billion in first half of 2025, full year-on-year doubling expected. Cash reserves climbed from $5.923 billion in 2023 to $13.269 billion in 2025, making funds too abundant to spend. Customer loan balances rose from 3.202 billion Chinese yuan in 2023 to 7.87 billion Chinese yuan by Q2 2025. Receivables up 145.8% YoY, reaching 15.13 billion Chinese yuan by Q2 2025. Credit loss provision coverage ratio rose from 14% in 2023 to 17.2% by Q2 2025. High-risk asset coverage ratio at 91.4% signals controllable risk. Deposit support for business cycles increased from 23.691 billion Chinese yuan in 2023 will reach 36.64 billion Chinese yuan by Q2 2025, a 54.7% increase. The loan-to-deposit ratio currently stands at 43%. Funding costs are 91% of interbank rate. Net interest income rose 11% to 2.1 billion Chinese yuan. Total customers reached 127 million by Q2 2025, a 17% year-over-year increase, 83% active rate. Technology drove customer revenue from 10 Chinese yuan in 2024 to 12 Chinese yuan and 20 cents by Q2 2025. With a customer service cost of 0 Chinese yuan and 80 cents and an 8.3% efficiency ratio, traditional banks lag in liquidity. Deposit to liabilities ratio rose from 64.1% in 2023 to 68.9% by Q2 2025, indicating stability. Debt to asset ratio of 84 to 85% remains within normal industry levels. Brazilian subsidiaries' 15.9% capital adequacy ratio complies with regulatory requirements. The semi-annual report outlines future strategies and geographic expansion in 3 phases. Brazil as core, accelerated penetration in Mexico and Colombia. With Colombia's coverage at 10%, Time Group will globalize in 2024 by expanding to South Africa and Southeast Asia. Digital financial penetration in Latin America remains low. Deposit growth and Mexican banking licenses will expand it. The current rolling P/E ratio of 33 times is within the reasonable range for the global fintech industry. The P/E ratios for global financial service providers range between 20 to 30 times, while traditional banks have an average of 15 times. This valuation gap reflects the market's recognition of digital banks' high growth and operational efficiency, specifically in the Latin American market. As a leading digital financial company, its valuation surpasses traditional Brazilian banks like Itaú Unibanco's median valuation. An 8 times P/B ratio is significantly higher than the global banking industry's 1.0 times average, reflecting historical valuation changes. News valuation has recently undergone a significant transition from a growth phase to a value growth phase. Expecting a $75 to $100 billion valuation with a PS ratio above 30 based on revenue shows optimistic user expectations. Scale expansion, while the current 33x PE is based on sustained profitability, with a net profit of $1.031 billion in 2023. With a net profit of $1.972 billion in 2024, growth shifts valuation from user numbers to profitability quality and sustainability. This valuation aligns with global digital banks' investment levels, but similar data for Latin American banks is unavailable. Considering NIO's 28% ROE surpasses industry average and 42.2% gross margin improves. The 33x trailing PE with a PEG of about 1.1 relative to the profit growth rate is within a reasonable valuation range without obvious bubble signals. The core factor supporting the valuation is the improvement of profit quality. The substantial enhancement of profit quality provides fundamental support for the valuation from a financial data perspective. It achieved a key turnaround from a $365 million loss in 2022 to a $1.031 billion profit in 2023. Net profit in 2024 rose 91.3% year-on-year to $1.972 billion, demonstrating lasting profitability, but is accompanied by the gross margin increasing from 34.9% in 2023 to 42.2% in Q2 2025. Operating cash flow surged from $1.266 billion in 2023 to $2.399 billion in 2024. Cash reserves reached $13.269 billion during the first half of 2025, ensuring extremely sufficient liquidity. Net interest income increased by 11% quarter-over-quarter to $2.1 billion in Q2 2025, demonstrating core profitability enhancement. Overall, NIO's valuation is at approximately the 60th percentile, placing it at the upper limit of a reasonable range. The company is solid, but prices aren't significantly discounted. Buying now lets you profit directly from its performance growth. Cannot profit from price fluctuations due to mean reversion. From a technical analysis standpoint, to enter now, you have 2 options, the more prudent Plan A. The other is the aggressive Plan B. Before reviewing plans, let's look at the specific trend. NIO's candlestick chart displays clear highs and lows. NU hit its lowest performance point before net profit shifted from negative to positive in 2023. The stock price then reached a very important resistance level around $14. Currently, the latest stock price has already broken through this crucial resistance level. With a new high within reach, the question arises, if you place a limit order to buy, you may face a potential pullback in the stock price, and the depth and target level of the pullback are approximately. It might be near the key resistance level around 14 yuan below, which was previously effectively broken. If you don't place a limit order to buy directly but wait for a possible pullback in the future, then there is a certain probability that the stock price will soar, leaving others behind. Therefore, if you want to allocate a position in this stock, the most rational approach is to place a limit buy for part of the position, should the price pull back and drop in future. Once it reaches the key support level near 14 yuan and stabilizes, buy pre-prepared positions to replenish holdings. This is a more prudent strategy for companies with performance and fundamental support, which combines the aggressive Plan A and conservative Plan B together. As for why to do this, the reason is simple. No one can predict the future, not even Buffett. His personal choice is to swiftly capitalize on the banking industry's digital revolution, whether by investing or speculating. Find that balance between unknown potential risks and potential rewards. And for us ordinary people, new bank. The most fascinating aspect is that it turns banking from a burden into a pleasure, transforming a task into an experience. Who wouldn't want to invest in a company that causes traditional banks to collapse? By then, it might become another magical story. Alright, that's all for today. I'm Kay. If you've watched this far, please subscribe, you'll be my early supporters, or just give a like. Thank you for supporting my video efforts. I'll keep uploading exciting content. Wishing you continued success in the stock market. See you soon.